Hello and welcome to interest.co.nz. I'm Gareth Thorne with another of our double shot interviews, and I'm joined today by John Bolton, who's the principal of Squirrel Mortgages, an Auckland mortgage broker. Welcome in, John. Thanks for joining us again.
Thanks.
John's here to obviously talk about the Auckland property market, your bread and butter, so to speak. Look, we hear lots of tales. We see the figures from REINZ and Barfoot and Thompson, etc. Is it as mad out there as it seems to be?
Yeah, it's pretty crazy. We've probably had our biggest 2 or 3 months ever in the last 2 or 3 months, so there's certainly a lot of buying activity out there. My sense, though, is that it might be just starting to peak now. I think vendors have certainly got really high expectations now in terms of the sort of prices that they can get. There's been some stellar sales around Auckland, and I guess everyone's looking at those and thinking, well, that's the new price. Whereas buyers, I think, are sort of starting to look at some of these prices and take a little bit of a step back. So the sense that I get is that buyers are starting to wake up to the fact that this is a bit out of control. And I suspect what you'll see over the next 3 or 4 months is maybe just a slight decrease in the amount of auctions that are converting, and maybe a little bit more property falling over at auction and coming back to price by negotiation.
So do you think this is really a case of a bit too much greed creeping in, people seeing the stories in the media of how much houses are going for, thinking, oh heck, maybe I can get that for my place, and then not actually quite being able to get it?
Yeah, well, I think the story that there's a shortage of property in Auckland's pretty much believed by everyone now. So that creates sort of a pretty compelling story around why prices are going up, and I think everyone accepts that. When you look at vendors, I think what's sort of, I guess, happened there is with the shortage of listings, they're basically getting promised the earth by agents, and I guess with what they've seen in the market over the last 3 to 6 months, that's certainly been the reality. So the expectations of vendors are very high. Buyers have probably been through a process over the last year of constantly having to revise their expectations. Either they're buying a lesser property or they're having to borrow more, and I guess they've accepted that because they've believed the underlying story. But prices are getting to a level now where there's just probably a growing sense that it's a bit too hot. I think part of the problem for buyers as well is just how difficult it is to buy. With everything going to auction, pretty much the buyer is going to be the nutter in the room. So we've got plenty of clients that are going to 4 or 5 auctions and just getting not even close to being able to buy property. The other thing that we see is that it's a small group of properties that are really driving the market. Most of the buyers that are out there at the moment aren't your DIYers. They're basically people who want a nice finished product. So the houses that are getting top dollar are the ones that are actually well presented to market.
Don't need any work.
Yeah, and then those are the ones that are going for absolute top dollar, but also probably resetting the rest of the market up.
And I mean, you guys obviously focused on central Auckland. Last time you were in, you told us how the high prices in the central Auckland suburbs were causing a sort of, I guess, push out effect and seeing prices rise in the next group of suburbs further out. Is that sort of thing still going on as well?
Oh, definitely. To give you an example, last time I was in, we talked about Avondale, which is a sort of little pet area for me. We had a house go to auction there about 2 weeks ago. Just within our firm, we had 5 clients going to that auction. So imagine how many people were going to that. It was a little 2-bedroom place on a half site on a pretty good street down near Avondale College.
Yep.
I think the previous buyers had purchased it for about $450, and it went for $613. Avondale, 2 bedrooms. That's getting up there.
Yeah.
We're still seeing that sort of activity, particularly with the entry level properties.
And the brick and tile units, are they still going like hotcakes?
Yeah. Oh, definitely.
Yeah.
Yeah. So anything that's basically entry level around 500,000 or 600,000 is flying out the door. And it's certainly got a lot of price support because there's a lot of competition for it.
What's the sort of most over-the-top price you've heard of late for a brick and tile unit in sort of central Auckland?
Look, probably, I mean, there's nothing ridiculous, but we're consistently seeing them now getting into the 500s. So sort of 530 to 550 would be becoming more and more common.
Yep. With the sort of traditional sort of 2 bedrooms and, joined to other ones and
in
a block.
1970s brick and tile.
And their CV would be quite a bit lower, I assume.
Yeah, probably in the high 3s.
Yeah, it's pretty significant. And in terms of the buyer interest, are you still seeing a lot of first home buyers around? Or are we seeing more investors or coming in now?
We're seeing a lot more investors back in the market. Still a lot of first home buyers out there, but a lot more investors in the market now. I guess probably off the back of getting some equity gain in their existing portfolio. It's given them enough leverage to drop back into the market and buy another one. I'm surprised how low the yields are generally on the properties that investors are buying. We're seeing investors buying with sort of 5% yields, which cash flow negative. So that sort of, I guess, traditional Kiwi investor that's all about sort of capital growth and not too focused on cash flow is sort of back in the market.
And how are the banks behaving at the moment? I mean, there's obviously been a bit of rhetoric from the Reserve Bank, and they're looking at various things they may or may not do to try and slow the banks' lending down. But are the banks still are they still undercutting their advertised mortgage rates by quite a bit? Are they still throwing cash at customers? I mean, are they still even paying break fees to other banks' customers to win them over, that type of thing?
I think that short period where the whole break fee thing was going on has gone. That's not really happening at the moment, but it's still competitive out there. So good loan sizes, big home loans. Good clients are still getting excellent deals. Big legal contributions, 42-inch TVs. It's still competitive with the banks. It's going to stay competitive because although it's a hot market, the actual underlying growth rates are still quite low, and there's a lot of competition there. There's a lot of, the banks are obviously highly profitable, and the housing market's probably the biggest profit pool. So you're going to see a continuation of them sort of just jostling for market share. Yep.
Now, obviously, we've got the Auckland Council with its unitary plan out there, a bit of a fight going on between them and the government, which seems to want more greenfields development and to smash Auckland's urban metropolitan boundaries, etc. What's your take on all of this stuff? And do you have any hope that these new houses that seem to be needed to, I guess, balance out the supply v demand equation in Auckland are going to be built anytime soon?
Okay, well, I can probably talk about myself in that context as well.
Yep.
Because I'm also a property developer. Bad word. I actually quite like the unitary plan. I think intellectually there's a lot that I like about it. I think, if you talk to most people, people will say, yeah, look, it kind of makes sense. Density is definitely part of the mix in the future. I think the big disconnect is that people don't trust government, people don't trust council, and there's a real disconnect between ideas and execution. It's sort of like the old days where a property developer throws up this really pretty development, show you all these lovely sort of sketched images of what it's going to look like, and you see the reality 2 or 3 years later and they're totally different. And I think that's probably how people feel about things like the unitary plan. They've produced all these pretty pictures and this great vision, but they have a history of not executing well. And so I guess people look at it and then they say, well, can they actually deliver it? And there's no faith there. And so then you get these sort of conversations about we want to force the unitary plan through, and I think people are naturally sort of pushing back on that, given the history of government and of council to not execute these sort of things well.
And look, if you get your crystal ball out here, if we were sitting here in December and looking back at 2013, how do you think the things will be looking for the Auckland housing and property market at that point?
Can I give you 2 answers?
Yep. Yep.
The answer I want is that it would have been a fantastic year. and the housing market would have probably maintained itself. Hopefully it won't keep going. I'd like to see it just stabilise, because I think the more it keeps going, the more this is a bubble. It would be nice for it to stabilise, for there to be sort of, ongoing turnover. Hopefully a little bit of development starting to come through to maybe sort of get that supply and demand equation working a bit better. But realistically, that's probably still, at least another year away. That's kind of what I want as an outcome. I'm probably getting a little bit more nervous about this market now. And with my property investor hat on, with the exposure that I've got, I'm actually probably just starting to de-risk at the moment. Because my feel is that this is actually becoming a riskier market, and that gets me a little bit more nervous. It just means there's a bit more uncertainty, certainly towards the end of the year and into next year.
Now, John, we also hear a lot about the Asian influence on the Auckland property market at the moment, especially from Chinese. I guess you got to split this into the residents and the non-residents.
Yeah.
But what are you seeing on that front at the moment?
Okay, so first thing to bear in mind would be that I'm obviously not a Chinese broker, so we probably see a bit less than probably what they would see in that market. From my perspective, there's probably two things. I mean, if we tackle the non-resident thing first, look, the reality is that to a degree we actually rely on non-residents for development. A lot of development basically needs to be sold off plan. The finance just isn't there for it, so it needs to be pre-sold. Offshore investors are much better at buying off plan than Kiwis are. Kiwis generally, we're a sort of want it now society. The thought of waiting a year to a year and a half for a house to get delivered is just outside of our consciousness. So we see a lot of offshore investors buying new development, and that's not a bad thing, because that's actually contributing to GDP. It's contributing to supply. That's actually a good thing. And I guess that's what they've got in Australia, where obviously they encourage foreign investment into new development, but not into existing property. We do see a bit of that here, and that's good. In terms of what we're seeing in the broader Asian market, it's pretty hot, obviously, in Auckland. There's a lot of money in there. If I gave you probably a couple of anecdotes, we particularly see it with a lot of our young Asians that have probably been over here studying at some point, and have probably got residency and either working or not necessarily working, getting large deposits out of, in particular, China. So as far as any surveys are concerned, it's actually New Zealand residents that are buying, but the money is very much coming from overseas. I had a young woman this week who was looking to buy a property in Onehunga for around 900,000, and she was in a position to put a 350k deposit down. She wasn't working, so. Initial thought was, well, sorry, that ain't going to work. However, she clearly couldn't borrow that much money, but the reality is she actually had another 600,000 on term deposit, which we could use as additional security. And so the bank, that became a no-brainer, because essentially there was enough cash there to take out the entire mortgage. That's actually surprisingly common. So we see that a lot with our younger Asian buyers, very large deposits coming from overseas, support from family, and that's allowing them to buy up property in Auckland.
And the other thing, I guess, is the Reserve Bank is looking at potential ways that it might be able to slow the market down, or at least slow the banks down, in terms of their macroprudential tools, potentially including caps on loan to valuation ratios. And they're also looking at maybe making banks hold more capital against housing loans.
Yeah.
What do you make of these sort of potential tools the Reserve Bank might bring in, and do you think it will actually have any impact on the Auckland housing market?
Firstly, LVRs. I think that would be a really bad call. And I think the Reserve Bank actually knows that. All that LVRs is going to do, it's just going to create a disconnect in the market. Essentially, rich kids will still be able to buy houses because essentially we just do guarantees or get deposits from mum and dad. And that was happening right through the financial crisis. that part of the market just didn't stop. It just changed a little bit, and the deposits started coming from elsewhere. Same thing with our sort of young Asian example before. Basically what it does do is it stops the grafters from getting into a house. It stops the people who maybe don't come from such a privileged background from getting into the market because they can't save the deposit, they can't go get the deposit from somewhere else, which to me just, doesn't feel right. So it's a pretty blunt tool, and I think it just doesn't really work properly. I really like the idea of the banks holding more capital. Because what that's doing is it's changing the profitability dynamics of housing and forcing the banks to be smarter about what they do and don't do, but leaving it to the banks to make that call. Whether that's that they tighten up, the high LVR lending a bit because it's getting more expensive, or they're a little bit more selective around making sure there's strong servicing, or that the underlying client's in a good financial position, or they've got good account conduct, or they've got low other debt. At least it's starting to have a more balanced and rounded conversation. So to me, it makes sense for the Reserve Bank to increase the amount of capital required, potentially for high LVR lending, for property investors where there's multiple exposures, particularly at higher LVRs, potentially for non-resident borrowing, because there's no income based in New Zealand that can service the debt. So there's legitimate reasons for putting more capital into some of those risk areas that I think would improve the dynamics of the mortgage market.
Well, great. Thanks for that, John. And I'm Gareth Vaughan at interest.co.nz, and that's John Bolton from Squirrel Mortgages.